settlement options. In general, the settlement option is selected by the beneficiary after the death of the insured. It is possible that the policy owner pre-selects the settlement option. The life insurance settlement options available include cash, interest, fixed amount, fixed period, and an annuity. I remember it with this weird acronym of SIFA. I don't have any great story like I had with Dear Sir, but SIFA helps me remember the payout options available for the life insurance death benefit, the face amount. C stands for cash, a lump sum payment to the beneficiary. Life insurance death benefits paid tax-free to the beneficiary. So the face amount's $500,000 paid to the beneficiary tax-free. I stands for interest. The beneficiary can, instead of cash, choose interest. By choosing the interest payout option, the beneficiary will always have the death benefit. So it is the only payout option that does not deplete the face amount. Interest is taxable. The interest is taxable as ordinary income. How much the interest payment is will fluctuate. The beneficiary has the right to choose to withdraw the death benefit, the face amount, at any time. So the death benefit, $500,000 in my story, not taxable, but the interest paid is taxable. Fixed amount installments versus fixed period. Be careful not to confuse these two. The fixed amount payout option allows the beneficiary to select a fixed amount they would like to be paid monthly. So fixed amount, I don't know, $1,000 a month. Then the insurance company, based upon the face amount and interest that's going to accrue over time, is going to determine how long the money will last for. How long the money lasts is a function of the fixed amount selected, account balance, and interest rate earned. So the beneficiary can choose how much money they want to receive monthly. This is not an annuity, that's another choice. Fixed period installments. In a fixed period installment, the beneficiary says, I'd like this money to last for a period of time. I'll just make up 30 years. The insurance company will then decide how much money they can pay out monthly based upon the face amount, based upon how long the beneficiary has asked for the money to last for, and the interest rate. So be careful. In a fixed period option, the beneficiary chooses how long the money will last. In a fixed amount payout option, the beneficiary chooses how much money they will receive monthly. So fixed amount, how much monthly, fixed period, how long. Fixed period, the insurance company will determine how much money will be paid monthly. So fixed amount, fixed period. Whatever comes first is what they're describing. With a fixed amount, the face amount is paid in a fixed amount for a fixed period of time. Fixed amount came first. With a fixed period payout option, the money will be paid for a fixed period of time. How much money will be paid? A fixed amount. So be very careful. Whatever term comes first, amount comes first, it's fixed amount. The period of time comes first, then it's fixed period. The last letter in our funny little acronym of SIFA, A, stands for the annuity. When your client wants to choose a payout option that will pay them for life, they want to choose an annuity. They can use the life insurance death benefit to fund an annuity. The annuity may be immediate. The annuity may be deferred. It may be fixed, variable, or equity indexed. The annuity payout option is the only settlement option that promises to pay the beneficiary monthly for life. The beneficiary can select the appropriate annuity payout option when they decide to annuitize, including single life or joint end survivor. If they choose a single life annuity payout option, The money will be paid monthly until the annuitant dies. If they choose joint and survivor, the money will be paid monthly until the last party dies. Oftentimes, spouses will choose joint and survivor as the annuity payout option. Payments will stop when the last party dies. So, life insurance death benefit payout options: SIFA, cash, interest, fixed amount, fixed period, and annuity. You have to know all of those. The test loves them. On the face of the policy, you will find the insuring agreement. It is the insurance company's promise to pay. I told you you do not find the exclusions on the face of the policy. Where do you find them? At the back of the policy in the fine print, just like you find policy exclusions at the end of this section. Policy exclusions. War and death during military service are generally excluded from civilian life insurance contracts. Aviation. If the insured discloses that they are a student pilot on the application, the aviation exclusion will often apply. If the insurance company wants to take coverage away for this activity, they would add an exclusion to the policy when issued. The aviation exclusion takes away coverage for death that occurs while the insured is engaged in private air travel, so not commercial travel. Life insurance policies will always cover commercial air travel, but if you are a student pilot or you fly your own little private plane, it's very common, of course, you need to disclose that on your application, that the insurer will exclude that practice, that hobby. Dangerous occupation. When an insured has a dangerous occupation, most insurers will offer coverage at a substandard rate, more expensive policy. So that's always the first counteroffer that the underwriter is going to make if an insured has a dangerous job. They're going to say, sure, we'll sell you life insurance, but your premium is now higher. The applicant has the right to say yes to that counteroffer or no, and go to another insurance company and hope that that doesn't happen to them there. So dangerous occupation, dangerous avocation, which would be a hobby. Oftentimes the insured can still get life insurance, it's just at a more expensive premium. We call that a substandard rate. That will be covered in a subsequent section. We did it. That's section 2. Section 2 is a lot of information. You will have quite a few questions on your exam as it relates to section 2. Be sure to listen and read the essential concepts related to this section and practice the questions as well. Happy studies.